Welcome to everyone. This week video will cover the S&P 500 market for the week of September 8, 2025. Before we start, make sure you read the disclaimer carefully. Last month, the S&P 500 market kept moving up until forming a 6,532.65 new all-time high last Friday, September 5th. Let's see what's happened since my last update and what we can expect for the next few months. Let's start by the 18-month cycle. The S&P 500 market new trading month started last Tuesday, September 2nd, and he started the month with a down day. Overall, the S&P 500 market is still in bullish trend, trading well above his 18-month cycle line, the yellow line. The peak for this 18-month is still expected to form in January 2026, and the low between September and October 2026. Let's explore the two different possible scenarios. Even if trading with cycles is very precise and very reliable, is not the holy grail and there is no crystal ball. For that reason, it is always good to have different scenarios and go with the one with the higher probability. The first scenario is my main scenario. Is when the last 54-month formed on October 2022. In this case, the actual 18-month cycle is the third one of the 54-month cycle. Usually the third 18-month of a 54-month cycle is bearish. If that's correct, we can expect the peak to form before January 2026. And the S&P 500 market to cross below his cycle line and find support on his 54-month cycle line, the red line. The second scenario is by moving the last 54-month cycle from October 2022 to the October 2023. In this case, we are in the second 18-month cycle of the 54-month cycle. The S&P 500 should also cross below his cycle line and provide a potential downside target. Then cross back above it to trigger the last upside target for the peak of the 54-month cycle. The actual 18-month cycle peak is also expected in January 2026 and the low between September and October 2026. In both scenarios, the peak is expected to form in January. We have to watch carefully where the peak will occur, before or after January. This will be the first sign of which scenario is more likely to happen. If it's happened before January, then we will keep the first scenario, otherwise we will start to think about switching to the second one. By keeping analyzing the weekly cycles, this will give us an important information about the next market condition. The 18-month cycle is a very good cycle to use for investing money on the long term, especially if is used within the 54-month cycle. Let's see now the next lower cycle, the 40-week. The 7,321 upside target is still valid for now, the only way for the S&P 500 market to invalid his target is by crossing below his 40-week cycle line, the FLD, before meeting his target. This will not only invalid the target, but also will signal a potential bearish trend. In fact, according to the Hurst rule, in a bull market, during the formation of the first 40-week cycle low, after a major low formation, the S&P 500 market should technically find support on his cycle line. This rule is applied to any cycle degree. A crossing below his cycle line will also indicate the peak before the crossing will be the 40-week cycle peak. The peak for the actual 40-week cycle is expected to form about now, the blue vertical dashed line. If the 6,532 new all-time high is the 40-week cycle peak, then he formed just at the peak of the cycle. If this 40-week cycle peak is confirmed, then we can expect a downtrend for the next few months until December 2025. For now, I do not expect the S&P 500 market to cross below his cycle line, but instead to find support on it, then keep moving up on his way to form his second 40-week cycle peak. And like mentioned in my previous update, should meet his 7,321 target during the second 40-week peak formation. With only one trading signal this year, the success rate is 100%, the second signal is still open. The 20-week cycle. The 6,532.65 September 5th new all-time high is 327 point or 4.76% below the 6,859 target. This high was the 20-week cycle peak. Since he formed on the right part of the cycle, we can expect a mild correction. The target for this 20-week low formation is his own cycle line, around 6,242. The low is expected to form this week or even formed on September 2nd. There is a possibility the 20-week low occurred on July 28th, and the peak during the same week. But since the cycle run little bit longer than the Hurst nominal model, for me the best place to label the 20-week cycle low is September 2nd. From a trading point of view, knowing where the 20-week peak formed between end of July or end of August is not very important. The most important is to identify correctly the 20-week low formation. For that we will need to go to the lower time frame, and also the market have to stay above his cycle line. Anticipating the 20-week low formed last week or this week, I draw the 20-week cycle trend, the VTL. If the low form later, then we will adjust accordingly the trendline position. The success rate for the 20-week cycle is 100%. The 80-day cycle. The last 80-day cycle low formed on June 23rd, and the next one is expected about now. If the 80-day low occur on September 2nd, then the next one is expected to form on November 9th, and the peak around October 6th. Of course, if the 80-day cycle is not over yet and form this week, then we will have to recalculate the potential date. I personally believe the September 2nd low is the 80-day low. The 80-day cycle give a lot of information about the amount of bullishness in the 40-week cycle. Let's come back for a few minutes on the 40-week cycle. In a 40-week cycle, there is 8 to 80-day cycle. The last 40-week cycle formed on April 6th. According to the Hurst rules, in a bullish market the first 80-day cycle should find support on his cycle line. With a 5,943 low on June 23rd, the S&P 500 market formed his low right on his cycle line, like expected. During the second 80-day cycle low formation, technically the S&P 500 market supposed to cross below his cycle line, providing a potential downside target, which usually is the 40-day cycle line. If the second 80-day cycle low is on September 2nd, the S&P 500 market formed his low on the cycle line, this means still have a good amount of bullishness in the S&P 500 market. Assuming the 80-day is formed, the S&P 500 market should now rebound and on his way to form a new all-time high. The 40-day cycle. There is a very high probability for the September 2nd low to be the last 40-day cycle low. In this case, the next one is scheduled for October 6th, the blue vertical dashed line. The peak can be expected around the September 20th. As explained in the 80-day cycle analyze, we can also use the 40-day cycle to calculate the amount of bullishness or bearishness in the 20-week cycle. In the present 20-week cycle, which started in April 6, 2025, each 40-day low formation happened on his cycle line. During the all cycle, the S&P 500 market never crossed below his cycle line, confirming the market is in very bullish phase. The next 40-day cycle should find support on his cycle line. If he crossed sharply below his cycle line, then this will be the first sign of some weakness start coming into the S&P 500 market. Because the S&P 500 market have been so bullish, we do not have new upside or downside trading signal. The success rate for the 40-day cycle is 100%. During a bull trend like we witness, is not very easy to trade due to the lack of trading signal. For that reason, is better to trade the next lower time frame, the 20-day cycle or even the 10-day cycle. On my website, tradingmarketcycles.com, I have a short-term trader corner dealing with the shorter cycles. In conclusion, the S&P 500 continues showing strong upward momentum, with multiple cycles supporting further gains toward the 7,321 target. While we expect some short-term corrections, the overall trend remains positive through early 2026. Smart investors should watch key support levels and prepare for potential opportunities during minor pullbacks. Remember, successful investing requires patience and understanding market patterns rather than trying to time every move perfectly. For more shorter time analysis, or to consult the success rate table, and to know how the cycles works in great details, I recommend to visit my website, tradingmarketcycles.com. If you enjoyed the video, please give it a thumbs up to support my channel. Share it with others, and subscribe so you don't miss any important updates. This concludes this week's video. Thank you for following along. And I'll see you next week with another exciting installment.